Hello, everybody. My name is Lush Eisner, and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending February 18, 2022. The indexes for the week are all down in Canada, as well as the major US indexes, as well as oil. So, sort of a down week all around. We are looking at getting rate hikes this year for sure, starting in March on both sides of the border. So the bond market is pricing in 7 rate hikes in the US in 2022, and JP Morgan experts are saying that as well, which I actually don't believe is going to happen. James Bullard, one of the US Fed counsel, said there would be 3 rate hikes by June in the US. Again, I think this would be a little bit too quick for everybody's liking. But I think the results are going to be that we're either going to get some inflation, around 4% by the end of the year, but sustained growth, or the Fed is going to raise interest rates a lot, reduce the inflation, but also kill growth and bring the US close to, yes, the R word, recession. And this has happened in the past, and this has been a fear of the markets. So the US investors do fear that the Fed will overreact and overdo the interest rates to cause a recession. And of course, the worst scenario here would be stagflation with persistent inflation but no growth. Keep in mind that the market also hates uncertainty, and so it's waiting on whether the March rate hike is going to be 0.5%, or whether there will even be an emergency rate hike outside of the regularly scheduled meetings. These uncertainties have an expiration time at least. I don't think either of these two will happen because of the US federal bond purchasing still going on, which the US Fed could have shut down at any time. They don't have to wait for a meeting, but they haven't. Now, on the flip side, the world doesn't do well if there is deflation with prices going down, because that really slows the economy as it removes the urgency of buying anything because the prices are just going to get cheaper later. And of course, in the US, the consumer is 70% of the economy. And so if they stop buying, that would cause serious problems. Moving on to geopolitics, Russia and Ukraine have somewhat de escalated the situation when some of the Russian soldiers have begun to be sent back to their bases from the border. Now, oil prices dipped on the news, but what matters is the oil inventories, not just the geopolitical risks. And we have a new variable with Iran possibly signing a treaty that will allow its oil to get back onto the market, which has increased this dip. The US producer price index was up 1% in January, far higher than the 0.5% expected. The US initial jobless claims also rose 23,000 to 248,000. Turning to Canada, the Canadian consumer price inflation accelerated to a new 3-decade high in January, reporting 5.1% annualized on Wednesday. Markets pricing in roughly 6.25% rate hikes by the end of the year in Canada. Perhaps back-to-back raises are possible in Canada if such a rate of increases would happen. Turning to what's happening next week, Canadian earnings continue, including all of the Canadian banks, while the US is mostly done. So on Monday, we have Berkshire Hathaway, Tuesday, Home Depot, Thursday, Alibaba, Royal Bank, Baidu, Tech Resources, Pembina, Northland Power, and Friday, we have CIBC, National, and Canadian Western banks. On Thursday, we have manufacturing PMI, as well as quarter over quarter GDP and the price index and sales. The initial jobless claims 4-week average is also reported on Thursday, as well as oil inventories. So that concludes my thoughts on the market this week. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.